Moving averages, I don't know if you use them, but it's certainly a tool that a lot of people look to when it comes to finding points for purchasing or selling different securities on the charts. And it's one of the questions that we've seen come up over and over again over the past few weeks is, which moving average do you want to use in this environment? So I'm going to keep it very simple and straightforward. I'm going to give you my absolute favorite longer term moving average for timing, so to speak, our intermediate to longer term type of trades. And it works like an absolute charm. So get ready. Let's have a look at it. And I'm going to be very simple and straightforward. The moving average is a 17-month moving average. 17-month moving average. And I'm going to just go through a few charts, and you can see that if you buy when you push above the 17-month moving average and sell when you close below the 17-month moving average on a monthly closing basis, you are probably, in my back testing, going to outperform almost everyone else out there. It's really that simple. So let's just have a look at, for example, Walmart, right? There are choppy periods, right? But even in choppy periods, you might kind of break even. But then when you start breaking above these moving averages, like here, for example, on a monthly closing basis, you'd be long for months and months and months and months. Or here, for example, right, there's very few times when you'd be out of the market. And when you are out of the market, it's usually because it's a choppy period. So let's move on to something like the S&P 500, which of course is what everyone wants to look at. So first of all, let's go back a little bit further and look at, for example, the bear market, or the bull market that we had in the mid 90s all the way through the year 2000. You can see there was really only 1 month where you would have been out of the market and then you would have gotten right back in. But then it would have taken you out of the market in November year 2000, and you would have been either short or out of the market for months and months and months and months, and then you broke back above it, then you break back below it. You guys can see that. And then the same thing here over the past bull market. There was a few choppy periods where he would take you out of the market and get you back in. Choppy period. It is really the, as you can see, I don't think I really have to speak for it. You guys can see how unbelievably accurate this moving average is in keeping you in the market and out of the market. Let's have a look at one more stock just to give you this idea. Apple, AAPL. Just have a look at this thing. So again, it gets you out of the market when you get into choppy periods or downtrends. It gets you into the market on trending periods. And again, it also, by the way, like if this is the only thing you want to use, you'll be less hectic. You'll be just in generally more relaxed, and you'll be a ton more profitable. So this is one of the things that we use for our longer term, quote unquote, timing of our intermediate to longer term investments. And it works like a charm. It's a bit of an oversimplification, but if you need a shortcut, if you want a shortcut to time your entries on things, again, this is to be used on a monthly closing basis. It works like an absolute charm. One thing I want to bring up one more time is the Wealth 365 online trader and investment expo. It's taking place in April. I would absolutely encourage you to sign up for that. There's a link down below. It's absolutely free. I'm there presenting. I'm going to show you guys a strategy in that webinar, in my presentation, that's going to show you how to use the options market for a much steadier stream of returns in the bear market environment that we have and probably are going to have for a bit of time here. But there's a ton of speakers. You get a lot of free stuff. I listen to a lot of the presentations myself. I always pick something up. So again, I would encourage you to sign up for it. It's totally free to attend, and we'll look forward to having you guys there. But again, it's the 17-month moving average is the one that I would highly encourage everyone to use, and you can do some back testing yourself. Let us know, leave us comments down below if you enjoyed this, if you have questions. I'm happy to do another video on this if you guys have more questions. May even do a live thing at some point soon on this kind of thing. But anyway, hope this helps, folks, and we'll talk to you soon.